Hey, what's up guys? It's Chris with Crypto Profit bringing you another technical analysis. So I'm just going to go over my goals once again, where my markers are at, what my game plan is for this coming week and the weekend. I feel like a lot of savage moves are about to start happening, a lot of really cool stuff. There's going to be a lot of movements, a lot of volatility. So I'm super excited for this week. I am sick and tired of these candles right here where we're just going neutral and nothing's happening. It's driving me nuts. I want to get in the market. I want to play some trades. I want to make some profit. So let me just go over my game plan. So right now, I feel like the market, there is a chance that the market makers might make this weekly candle close in a neutral position. So they might bring it up a little so that it stays neutral, because this brings a lot of pressure in the market. It drives people nuts. People start doing a lot of bad trades, and then they can go ahead and blow accounts and blow shorts and stuff like that. So there's a chance that they do. So remember when I said failure to plan is planning to fail? So if they go ahead and move the candle up, the max that they're going to bring it to is around 35, 30. And then once it closes, I feel like that the same thing when we go over to the 4-hour, the same thing that happened right here, where we moved around this area for a while and finally broke through, is going to happen here. We are starting to have the formation of a rising wedge shape, meaning that we're most likely going to go to the downside. So I can see it's just closing the body candle where we're at right now, maybe going a little bit higher, getting rejected by support and resistance lines, and then continuing our descent to the downside. I am going to be doing things a little bit more risky. I wouldn't recommend you guys doing that if you guys don't have the capital and you guys aren't willing to be on the charts all day and pull out as you start seeing movements in the markets. But I'm going to tell you what I'm doing just so you guys are aware, and then you guys can decide whether you want to do that or just play the safe route. So, like I said, I think we're bouncing around this area right here, and then we're going to get rejected and start going down to the downside. Like I said, it's not going to happen tomorrow. It's not going to happen today. I think it's going to happen around Monday or Tuesday like it did last week, right? RSI is starting to get a little bit overbought, so there is room for us to continue our descent to the downside. We're trading below all their moving averages, right? So what I'm thinking about doing is placing a trade on the weekly, on the 200 weekly moving average. So right now, that's at around 32.98. So I like to place some a little bit higher just in case, because yesterday I placed a trade, and if I would have placed it a little bit like at the exact support and resistance line, I wouldn't have been able to hit it. I would have been $1 short and my order would have stayed open. So I like doing it a little bit higher. So I'll probably do it around 3,300. And then I think from there, let's go over to the 4-hour Coinbase chart. I think we're going to see a short-term reaction rally where we hit our level right here at the 3,300, bounce off of it, go to this Fibonacci level, possibly get rejected, and then continue our descent to the downside. And then we can bounce around my next goal, which is going to be around 3,250. Why 3,250? It's just this support and resistance line right here. It's going to be above these lines right here, right? Like that's where we had a cluster. So it's just going to be the bottom of the cluster where there is a chance that we might just go down to that level, bounce around there, possibly look to go down to test this yearly low at 3,150, or possibly go down a little bit lower and go to 3,000. Where am I getting these numbers for? Because on the Kraken chart, that's where our major support and resistance line. So it's slightly different, but pretty close. So instead of 3,150 or 3,200 like it is here on Coinbase, on Kraken it's at 3,000. So that's where I'm thinking that we might look to test to have a double bottom formation, have a short-term reaction rally to the upside. This time, I initially thought that we were just going to go ahead and touch the 200 weekly moving average, bounce off of it, and then go up, and then go possibly to create a lower high around this area right here, around 3,800 to 4,000, somewhere around there, right? So that we have a lower high than this one. I don't think that that's what's going to happen now. I feel like what will happen is we'll go down, maybe bounce around 3,300, maybe bounce around 3,150-ish. And then from there, we'll go to the upside. And instead of going that high, I think we'll just get rejected by this Fibonacci level right here, which is going to be around 3,550. And then we'll chop around this area right here. then continue our descent to the downside. And then once we create confluence on the weekly, so once these two lines cross right here, and we have our 50-week moving average below our 100-week moving average, I feel like we'll move our descent to the downside and go from this previous channel where we're at right here right now and start trading to this previous channel around the, I think the lowest is going to be is 2400. We'll bounce around that area, maybe possibly make another descending triangle, then continue to go down to possibly 1900, or we could also just go to 2400, bounce off of it, and start heading up back to the channel that we're trading at right now. So that's what my game plan is. So I'm going to be a little bit aggressive. I'm going to place an order. I'm going to stay up during the weekend and on Monday because the market tends to move around 12 o'clock, 4 in the morning, which is a little bit annoying. But since I don't have a job, I get to do stuff like that. And then just kind of monitor it, see if we just break through with some momentum or we pull out. So what I have right now is I have an open order at 32.50, and I'm just going to be monitoring the market to see what happens once we start getting close to that 200-week moving average. I didn't want to have an open order there because if we just break through with momentum, then, you know, I'm at a loss and then I have to wait a little bit longer before I can pull out. So I have it slightly lower. I'm going to monitor it. If I see that we're bouncing off of it, I'm going to close it really quickly, place a trade. You know, this is going to be a 10-15 minute trade max. Have it shoot up, pull my money out, and then go to re-enter again at 32.50. Possibly have a bounce off of that, and then look to get back into a short-term long around 31.50 when we start testing that new yearly low. Yeah, that's what my game plan is. And then if we go over to the 15-minute on Coinbase, we can see the formation of the rising wedge shape. You know, we've been bouncing around this area right here in this channel. We did try to break through this Fibonacci level. We went up, but when we look over to the RSI, we were extremely over sold. So that's why we broke down. Like I said in the video yesterday, is that stuff like this is not good. You know, the bigger they are, the harder they fall. So it would have been better if we dropped down to the 200 weekly moving average and bounced around that area, found consolidation around there. Then we could have bounced up and have a higher high. But unfortunately, since the RSI was low, so that the algorithms and the bots could continue to do their range-bound trading, it did go up. We stayed around this Fibonacci level right here. We tried to test to the upside. Didn't even make it to this support and resistance line right here. And then we started creating lower highs after lower highs. See how we keep trying to break through, but we keep getting rejected over and over again. That's why I don't think that they're going to try to squeeze around right here, the 32.50 at the Fibonacci level. I think this is the highest, so that we have a lower high than this right here, so that the algorithms can be extremely bearish, so that we can make our drop down to the 200 weekly moving average and possibly even break through it, past it, and start trading around that 32.50, 3100. So as always, guys, remember to trade responsibly. This is not trading advice. This is just my own opinion and observations in the market, and I just want to let you guys know what I'm doing. Let me know in the comments below what you guys are doing. Remember to look at people telling you the opposite so that you can have a plan for the upside and the downside. Failure to plan is planning to fail. We're not Team Bear. We're not Team Bull. We're Team Money. So as always, thank you guys for watching and have a great day.